What's up, traders? I was able to trade again today, so we're going to talk about it. This morning, SPY didn't really produce enough of a gap for me to trade my normal strategy right out of the gate, so I sat around, waited until the next one presented itself, and that was right around 9:55. You can see down here I was in one contract, a put, on the 279 puts expiring Friday. I built the two contracts, and I'll talk about this more as we look at the chart, and then ultimately lost some discipline there and bought another one, thinking I could average down. Total blunder on my part, cost me about $6, and then got stopped out of the trade for about a $35, $40 loss, somewhere in there. If you want to calculate it, let me know in the description. Next trade sort of presented itself. I found myself looking to sort of get back some of the money I'd lost, and I think this is why I jumped the gun here, but my initial entry point was way too soon. Too eager to get in on my part. Should have let the trade play out a little bit more before I started to get in. It was an overextension, so I ended up building to 5 contracts. 5 contracts is my limit on these types of moves. If I get in any more than 5 contracts, normally I know I'm just trying to fight the trend too much, and things ultimately don't work out when that happens. So built to 5 contracts, max amount, and then took 3 off for profit, 1 off for a little more profit. You can see over here in the price jumps, and then got my one runner stopped out for about $1 gain. My average after all this was $1. So ultimately a loss on commissions, but that brought me back to minus 11 on the day. So let's take a look at the chart and see what I was thinking. Alrighty, so this is what we were looking at this morning on the 5-minute chart. If the gap up setup or gap down setup doesn't play out right away, I start off watching the 5-minute chart. Anything less is going to be way too choppy for me personally. So we had this pop up. We filled the gap here. You can see that the high of this candle is the same as the low as this candle. So I was thinking gap fill reversal, waiting for a signal that we were going to go lower. We broke down below the 200 SMA, which is this green line here. And then we got a little bounce off of this support area. And I bought one contract here. This is my initial entry point, thinking that the 200 would hold the price down. Ultimately, it didn't. We went a little higher, and then we put in this candle. This is an inverse hammer candle. If you know what this means the price is getting rejected from this area. It's not a guarantee, of course, as we can see here, but normally that's what that indicates, that there are sellers here. It lined up with the wick of this candle quite nicely, so I bought another contract, which was my second entry there. Price pulled back a little bit, and then the next candle was where I totally panicked and didn't exercise enough discipline. I bought that third contract, and there was absolutely no reason to. So the price started to go my direction. I saw it getting supported by the 200 SMA. Price went up again. I was like, oh, let me just average down one more time. I thought that would be a good idea. It wasn't. Ultimately, we had this big bounce, so I ended up with 3 contracts and taking that loss just over the 55-cent mark. In here, 279.55 was my stop, and good thing I did. I think ultimately the price came up, and the price of my puts had gone down significantly further than that. Of course, yeah, you should have just held. It would have came down. Well, you can't say that every time, so I'm glad I honored my stop loss there and got out where I needed to get out. Second move happened. We came back down. This was an overextension in the downside. Could have played this one for calls and played this move up, but I didn't. Instead, I saw this start to happen. And then this is what I mean by I was too impatient on my entry. I have this resistance trend line drawn in, this white dotted line. It's coinciding very nicely with the 50 SMA. I knew the price was likely to go there. That's where the price seemed to likes to hang out. It went up to the 50 here, got rejected. It came down to the 200, found a little support below it, and then it went back up again, finding support right around the same set of lows down here. So we obviously came up. Again, should have exercised more discipline, more patience, waited for the price to come to me, came all the way up. I had bought, as we talked about, 5 contracts in the span of time between the bottom of this orange dot and the top of this orange dot. Price went sideways for a little bit. This candle formed, was not stopped out. If you want to guess why I was not stopped out here, the high of this candle is 280.24. If you want to guess my stop loss, go ahead and let me know down below in the comments section. Didn't get stopped out. We formed this beautiful selling pressure candle. You can tell by the upper wick here. Came back down, broke through that 50 SMA, which was acting pretty pesky. You can see we started to bounce off of it here. And this candle, believe me, as it was forming, was bouncing a little bit as it attempted to get through it. Took off the first 3 contracts here, another one here, and then I got stopped out after we broke over the high of this candle. For my last one here. Of course, you could have said, why didn't you just hold on? It would have made you way more money. Of course, I could have, but in hindsight, everything's as easy as, oh yeah, you should have just done this, you should have just done that. In the heat of the moment, this is a big green candle. I don't want to give back any more than I've already given to the market today. So I was out here for, again, a dollar profit, but a loss after commissions, a dollar loss. So with that is the trade recap. Someone had mentioned in the comments, oh, your strategy is to just buy puts, and even if the price goes against you, you just hold on to them until you're profitable. No, that is not the case, and you can see that here. I bought puts here expecting the price to break down below the open. If the price had broken down below this opening support level here, I can only imagine what kind of red we would have seen on SPY. If we scrunch the chart up a little bit, look to the left here. Tell me how much room SPY has to move to the downside. If this low had given here, I could imagine it coming all the way down to this set of support down here. Even if it only came down to this one, it would have crossed through 279. I was playing the 279 puts, if you remember, and things would have started to accelerate as I got into the money. And even if we came down to here, say we even came down to here, that would have been one heck of a nice trade, and that's ultimately why I took that trade. On the second one, this is just a simple overextension move. This is more about getting the feel for a stock and how to play it. So just a little bit more about my strategy, how I play them. Stop losses and things like that are going to be a little bit more personal to your risk tolerance, and obviously you want to make them make sense with the supports and resistances. But with that, I hope you could learn something. If you have any questions further than what I've explained here, let me know down below in the comments section. And with that, I hope you have a green rest of the trading week.